the monetary system, the fiat, government-based, based on inflation, there's virtually no purchasing power left in the currencies. And this is true in the US dollar. Officially, there's 3 cents left. The US and the fiat money system has really driven the world to zero value. And now we're seeing inflation heat up, and that tests the only other tool they have, and the key tool that they have, central bankers meaning, and that's interest rates. Because the world is essentially anchored near zero and has been since 2008. And typically when you go into, a recession, this is going to be way bigger than a recession. But when you go into a recession, what do central bankers do? They drop interest rates in this country on average about 5.5 to 5.75%. That stimulates borrowing and spending. And so it makes it look like we're coming out of a recession. But when you're anchored at zero, the big experiment with negative rates, as that didn't really stimulate economic growth. I mean, there is absolutely no doubt, because look at the level. What really is inflation, right? Inflation is the consistent loss of purchasing power. And when you look at the graphs the official graphs on purchasing power loss, this is the piece that everybody misses, right? Stock markets going up, crypto markets going up, real estate markets going up, but that's in terms of a dying dollar. So if you have an asset, a financial asset, that you can only convert into that government money, whether you're in Ireland or whether you're in the US or whether you're in China or anywhere in the world, if you can only convert that into the government money, and the government money loses all of its value, and it will do that based on confidence. That's why they test that consumer confidence and inflation expectations and all of that, because this is a con game, as you well know. And so when you look at what's happening, this is definitely the loss of world reserve currency status of the U.S., but that's a long time coming. How about if I tell you, because this is one time I do agree with the Bank for International Settlements, the BIS, the central banker's central bank, and I turn to gold and silver for a number of reasons. Number one, because according to the BIS, and this is a fact, it is the only financial asset that runs no counterparty risk. Absolutely everything else is all counterparty risk, including the U.S. Treasury as the foundation of the global financial system. Number two, it has the broadest base of buyer. And I basically hardly ever hear anybody talking about that fact. But, whether it's yen or euro or dollar, it has value. It has a narrow base of buyer because it's only in one sector, the financial sector. But when you're looking at gold or silver, it's used in manufacturing, it's used in the financial system, it's used in the jewelry system, it's used in the medical system. I mean, it's on and on and on and on and on. A rising gold price is an indication of a failing currency. Do they want you to know that the currency is failing? No. So they've had to suppress the price for, really, a very long time in order to be able to manipulate how you move forward. It's called officially perception management. And then on top of that, there's a finite amount of this. That's it. There's only so much, whether it's above the ground, in any form, doesn't matter. There's a finite amount. But what can they do? They have these financialized contracts, spot market and futures contracts, where there's an unlimited amount of gold. Before they changed the way they accounted for it, according to the Bank for International Settlements, for every 1 ounce of this, 1 ounce of gold, there were 62,000 derivative contracts. That is gold that does not nor ever exist, and that's just in one area. When confidence is lost in the current system, and we are rapidly approaching that, as you indicated, then people lose confidence. That's when we'll enter the real hyperinflationary stage. And then in order to get the public to use the currency, what they'll do is, I mean, globally on average, they do this 3 times. So it could be more, it could be less. But they'll lop off zeros. They'll just change the accounting. And what you'll see is when they do the revaluation, they do it against gold, period.
Right.
Gold is the only thing that has evolved over thousands of years to be a good money. It's the only instrument, the only commodity, the only anything that actually has all of the components required to be a good money. So they revalue it against that, and then ultimately what happens is gold goes near its fundamental value, which I just did the calculations on this last week, so these are new enough. And that was, right now we're at what, 1964 or something like that.
Mm-hmm.
True fundamental value of an ounce of gold just in the U.S., so it's actually higher, and this is conservative, is over $13,000. You know, people are starting to wake up. We're starting to see consumer confidence and confidence in the system. They not starting, but they are near historic lows, which means it won't take a very big push. I don't know, maybe 15% inflation before people lose all confidence and we go into the next phase of this. And you better have physical gold and silver in your possession in order to do that. But you also need food, water, energy, security, barterability, as well as your wealth preservation, your community, which is really why I'm here today, because this for me is about community, and shelter. These are the things that we need no matter what is happening in the economy in order to be, survive. So the reality is that the physical metal itself has the broadest base of buyer because it's the only financial asset, the only asset really, that's used across every single segment of the global economy. It's universal money. And it is small, easily portable wealth. And it's truly invisible. That's why governments around the world have spent so much time trying to teach people away from gold and silver and into their fiat money products because it's so much easier to steal.